Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So as you know, a lot of the companies that I have in this portfolio have reported earnings over the last 3 weeks, 2 weeks, and some of them are still reporting. So what I want to do today is talk about one company that has actually not done well this year, and this is one of the companies that I've had in the portfolio for a very long time. So we're going to do a quick dive into this company. First, we're going to talk about the business. We're going to talk about the financials. And then at the end of the video, I'll tell you exactly what I'm going to do with this company moving forward, inshallah. What you see here is my entire portfolio. So right now we are here, and the individual stocks, this is what you see, and this is the ETF. And if you combine the two together, this is what you get. As always, if you can like the video, it takes a lot of time to put these videos together. So if you can like, if you can subscribe, that will be absolutely amazing. And if you are able to, then you can join us at the Patreon account, where you get access to the Discord. You get where a lot of brothers are sharing good practices. You got all the buys and sells that I regularly make. You also have the monthly undervalued stocks that I normally add to basically on that list. You've got all the dividend watch lists, as well as the dividend trackers and so on. So you get a lot out of it. So inshallah, if you can join us, that would be absolutely amazing. And also, as you know, you guys, I normally, this is my portfolio tracker. This is the one I use. This is the one I've shared with you guys on the Patreon account, and I really like this. I built it, or it took me quite some time to actually build this, and I still use it. Although I prefer this. It's not automated. It's everything is, of course, you see is automated normally. These are my all individual stocks and all of that stuff. But recently I've been trying to find another way of actually tracking my dividends, and I came across a website called Snowball Analytics, and I have been using this for quite some time now. I haven't actually shared with you guys, and I genuinely share it with the community and see what you guys think as well. It's quite useful. It's quite right now what you see is in my entire portfolio in US dollars. You can change this to pounds if you wanted to. It kind of gives you the total profit. It gives you the passive income, the dividend yield, if you like. And this is my favorite part. It gives you the breakdown of the different sectors. And as you can see here, that's the different sectors that I own. For example, if I click the technology sector, it gives me 5 different companies that are in there, each one of them how much I've got in terms of pounds, and also it tells me basically the gains and losses, and so you can see a lot of them are up. And then consumer discretionary, same goes for financials. I really like this. I like the fact that all of this is just in one place. It's kind of nice and neat. Then you've got your gainers, your losers while the market is open. You've got any recent news about your companies. So the upcoming events, so any dividends that are coming out, any ex-dividends that are coming up, earnings that are coming up. So all of that in one place, which is quite nice. And then you get this part where you get all the news, if you like, and then the future payment. So my target is like 5,000 by whatever years. And as you can see, in December, I'm expecting over £300 basically in dividends, and so on. So it's really good. I've been trialing it out over the last few weeks, and so I wanted to share with you guys. You can click your holdings, and then you can click dividends, and you can see the dividend safety for each one of the companies that you own, including ETFs and so on. And then so yeah, and try it out. Basically, I'll put the link on the description section, so if you're interested, have a look at that as well. I really like this. Like I said to you guys, this is my favorite. This is my go-to. But I've been trialing this out, and it seems really good. So I just wanted to share with you guys, just in case you are just like myself, want to track everything that you own and see how they doing. And also it gives you basically, you can research about different companies, and it gives you a lot of information about the company as well, which is quite nice. You can look at the financials if you like. So yeah, there's a lot to like about this website. So if you're interested, have a look at that, inshallah. Right, let's now talk about the company that we're here for, and that is Merck. Merck has been one of the companies in my portfolio for a very, very long time. It's one of the biggest pharmaceutical companies out there. They've got loads of different drugs, which I will share with you guys in a second. But as you can see, it has done absolutely nothing since the beginning of the year. So right now we're in November, and we're almost there at the end of the year. As you can see, we've lost about 12% since the beginning of the year, which is not great. But what I want to show you guys now is the latest earnings report. So the 31st of October, they reported their earnings. And basically some of the things that I just want to show you some of the highlights. There's a bit of information about what they want to talk about. So Q3 is basically what they reported, so they've got one more to report. And as you can see here, worldwide sales for basically in terms of revenue side of things, we're looking for right now about $16.7 billion, which is basically about 4% up from last quarter. Or basically if you take out basically the exchange rates, if you exclude the exchange basic rates and all of that stuff, it's about 7%. The full year sales, okay, in 2022 was $59.3 billion. That was up basically 22% from the previous year. And in 2023 it was up about 1% over basically almost to $61 billion. The guidelines for this year is about 63.6 to 64.1, which is about 6 to 7% higher basically than basically last in 2023, which is really good. And when it comes to EPS, more or less the same, so 7.4 billion dollars per share in 2022. Has it declined in 2023, but as you can see here, 2024 we're expecting 7.72 to 7.77 in basically basically in 2024. Inshallah, see what happens. And these are the different basically sectors or segment within their business. So they've got vaccines, they've got oncology, if I can speak, infectious diseases, they've got immunology, and then business development, which is basically they acquired this business that will help them, of course, and have a more potential applications on oncology and immunology. So it'll be interesting to see how basically the company does moving forward. There's a lot of information here. You can see how basically the information that we've already seen, but the breakdown, because they do have animal health and human health. So out of this $16.7 billion, almost $15 billion of that came from human health, and then $1.5 billion of that came from the animal health side of things. Keytruda is their main basically player here, $7.4 billion basically of revenue from Keytruda of that $16.7 billion. So just that's quite a lot. So and it has increased about 21%. So there are other drugs. So as you can see, Keytruda is actually increasing year by year, so quarter by quarter. So Q3 of 2022, Q3 of 2023, and Q3 of 2024. If you compare it, you can see about 26% from the previous year, about 17%, and then 21% from in 24, which is quite a lot. So this is their main drug if you think about when it comes to this company. However, they do have other drugs as well that they basically got these drugs that are actually also increasing in basically in value, which is really good to see. So they're not just relying on Keytruda, they've got pipeline of products that they're actually currently working on, as well as of course these ones that are well established and are increasing in revenue every single year. And this is one of the reasons I like this business. Okay, and as you can see, there are more. Okay, so some of them, as you can see here, now we get into the basically potentially $1 billion of revenue from this per year from some of these from some of these drugs and so on. So there's a lot of information to find out. As you can see here, how many patients they've got, the total patients. They've got a lot of information on this. Okay, and they kind of break down each section. So each drug, for example, continue successful launch of this, and then they talk about basically the patients and all of that, the payers, the prescriptions, and all of that stuff from the animal health. So there's a lot more information. Even the animal health side of things, as you can see, the breakdown, it is also heading in the right direction. So I really don't have anything to worry about in terms of the pipeline for this company and where they are right now. The only other thing that I would be main concern before we look at the financials of this business is the potential headwinds from the election. Basically, the fact that Donald Trump could potentially, put a lot more emphasis. Basically, all the pharmaceutical companies are right now do not know exactly where they stand with the new basically government, and this happens every single year. Okay, since as far as I've been investing and basically checking politics or whatever, okay, every single year, every single 4 years, every single election, it doesn't matter whoever comes to power, there is always that worry about they might actually force these companies to reduce the cost of the drugs that they have, and that can potentially hurt their revenue side of things and so on. So we will see what happens. Okay, right now that's just potential headwinds, but we will see what happens. But there's a lot more information. If you're ever interested, just go to the business strategy for this company. If you read this, you can pause the video and have a quick read. It is really good. It reads really well, and I think in generally for me the most important thing is the fact that Keytruda for this company is their blockbuster drug. Okay, and potentially will be for next whatever years, and they are expecting to increase that basically market share and so on, because they still have that patent. So we will see what happens. But let's now look at the financials. So as you can see here, this pharmaceutical company currently trading $95 per share. $4.77 is basically where they are right now in terms of EPS. 242 billion market cap. It has a wide economic moat, and the beta is quite low. Current P is about 20. The forward P is about 12.55, and the 5-year average is about 14. Now, if you compare that with the sector, okay, right now it might seem slightly more expensive than the sector, but again, the forward PE is actually very low if you think about this. Okay, currently in terms of dividend, 3.13 dividend yield. The payout ratio is 51%. Annually you'll get $3.08. The 5-year average, we're looking about 8%, and the 5 dividend growth streak of basically 13 years. Now, dividend safety from Seek and Alpha, it says a B+, and free cash flow $14.8 billion. The free cash flow compounded annual growth rate for the last 5 years about 11%, which is really good. Free cash flow yield of 5.3, and free cash flow margin of 24%, which is really wonderful to see. Profit margin, return on equity, and return on invested capital, really good, as well as of course operating margins, which is about 23%, and the return on invested capital is 23% as well. Net income compound annual growth rate for the last 5 years is 8%. Total return in the last 10 years almost 8%. Revenue growth 7% in the last 5 years. EPS growth for the last 5 years 11%, and current ratio is above 1, which means the company has enough cash or liquid assets for the next 12 months if they basically to cover their liabilities, which is really good. Revenue side of things, in terms of expectations for next year, they expect the revenue to grow by 6% in 2026. EPS growth, they expected about 21%, which is really nice. Current price we've already seen, according to Morningstar, is basically $120 per share. That's about 18% discounted right now. This company, let's see, Simply Wall Street has been always bullish on this company. They think it's 64% basically undervalued at the moment. $280 per share, which is very bullish in my opinion. The price target from TipRank for the next 12 months is $133 per share. That's about 40% upside from where we are. They have a strong buy rating for this company, and Seek and Alpha is a buy right now, $131 per share, 33%, almost 34% upside from where we are. I'm going to show you in the entire valuations in a second, but as you can see, in terms of Sharia compliant, there's nothing to worry about this company. Okay, and they are buying back their own shares, which is quite nice. Now, looking at the Sharia compliant side of things, the valuation side of things, before we do that, in fact, if you can like the video, if you have not done that already, that will be absolutely amazing. That will be very helpful. And as you can see here, we've got Morningstar valuation, we've got the Seek and Alpha, we've got Simply Wall Street, as well as discounted cash flow model and multiples valuation model, which I used. Okay, all of that average out, you get $161 per share. Current price is 96. That gives you about 68% upside from where we are. If we say we need a profit margin of about 15%, is $137 per share. Even if you think this is very risky company, you still basically, in my opinion, okay, and again, this is just my opinion, Morningstar valuation is probably the best one to use out of all of this. The fact that discounted cash flow model actually gave me $114 per share, that is actually quite decent, and Morningstar of 120, that is basically what I would go with. So if this was $120 per share, that gives us about 18% of basically upside from where we are, which is quite nice, because that's what we had in here if you think about it. I think it was $18, basically 18 discounted right now. So overall, genuinely is probably one of the best companies out there. But as you can see here, it seems undervalued at the moment. They have a nice pipeline and so on. But again, there are potential headwinds that you need to be worried about. If just any, basically Donald Trump basically forces any of these companies to reduce the costs for their drugs and so on, that could be a problem for this company. Now, if we look at the shares of this company that I own and how much I'm up or down, if I can find Merck, I think it's one of the lowest ones. There we go. I just saw that. Okay. My basically current average is $77 per share, or 57 pounds. Okay, and I'm up about 33%, which works out about 5%, which works out about 515 pounds. Now, there was a one point where this was up quite a lot, so we hit the highest I think we've hit with this company. I think it was about $131 per share exactly, and that was about £1,000, basically 500 pounds higher than what I have right now. So moving forward, what I'm going to do is, inshallah, I'm going to keep an eye on it. I'm not going to add to it basically in the next few weeks. I want to see if it comes down on it. Basically, there's a bit more bad news, because remember, Donald Trump's will take over in January. When that happens, if he comes out, opens his big mouth and says stuff about whatever, then potentially this will go down. And if it goes down, then I will be buying more, inshallah. But right now, I'm happy with what I have. I'm going to hold on to that despite being basically undervalued. But if it comes back to my price range, which is about 77, probably about $80 per share, I will probably start buying more. But right now, I'm happy with what I have. And because of the potential headwind in the next couple of months, I will not be adding to this, inshallah. I'll let you know, inshallah, exactly what I do. If you want to check out Snowball Analytics, I'll put the link in the description. Have a wonderful day. Assalamu Alaikum.